Daryl, great to see you. One of the things that struck me from your predictions for next year is how much incoming it sounds like you guys are getting in terms of, the demand is there. People want to buy houses. It's just sort of pent up and there's no breaking point. So what's the thing that changes in the new year?
Well, all year we've noticed that with any small change in mortgage rates, buyers respond. When mortgage rates go up, they back off. When they come down, they come back to the market. What's a little bit different that we're seeing now is more sellers contacting us wanting to sell their homes, which would mean if that trend continues that we'll see more inventory next year, more home sales without prices going up. We were worried that if mortgage rates were to fall, that would bring a lot more competition to the market, but we're a bit more optimistic now that more new listings will be coming on so we can get more sales without much price pressure.
Do you have a floor on mortgage rates that you're looking at right now? We saw them as high as 8%. Every percentage point means a big deal to affordability. Where do you see the rates landing?
There really are no limits on where rates could go. I think we've known that from history. If we were to have a surprise recession, rates could fall very dramatically. But in the most likely scenario, we expect rates to come down to around 6.5%-ish, maybe 6.6% by the end of the year, which isn't a huge relief, but it's enough to make hundreds of dollars of a difference for a potential home buyer. And that's a monthly mortgage cost.
And you also are looking at home sales increasing on the year overall as a result of what's happening here, as prices see a decline, not much of a decline though.
Yeah, so with more listings coming on, that's what we're forecasting. We're thinking that there's going to be less of this mortgage rate lock-in effect, people just getting impatient with wanting to sell. People may have been postponing it for year after year with these higher mortgage rates, thinking that the market was going to get better. And now we're seeing a bit more sellers coming to the market saying now is the right time. So if that trend continues and we have more inventory, then that would lead to more sales without any price pressure.
What about the rental market? What trends do you see there? It's been somewhat stigmatized, that is renting versus owning, not necessarily here in New York where most people have to rent, but overall, nationwide, where do you see those trends?
We think the stigma of renting is going to go away next year, basically because of math. It's more affordable to rent in much of the country than it is to own. Now, a lot of the rentals that are available are on the smaller side, those 1-bedroom or even 0-bedroom units, which don't tend to directly compete with your 3-bedroom single-family home. But still, if somebody is deciding that they want to stay in their apartment a bit longer before they make the jump to owning a home, I think next year it's going to be seen more as a financially prudent decision, not something that is throwing your money away on rent.
And one of the other things that we're potentially looking at next year is sort of structural changes in the real estate industry. We had a recent court ruling that could affect, how, frankly, firms like yours work and just the brokerage industry broadly. So what are you looking for on that front?
I can't speak on the lawsuit directly, but what I can say is that we've seen trends in the real estate industry with fees coming down and more buyers using the same agent that the seller is using on a home. So we think moving forward, we're going to see more of that dual agency, especially if there are limitations put on the way that buyers pay agents and sellers pay agents.
Well, Daryl, we think, thank you for stopping by here. That's all we have time for, but we will be moving on, and we'll ask you to come back maybe to predict something for 2025 or and beyond.